Hello friends. So last Friday we recorded market क्या लगता है video and wherein to analyze Nifty's current trend we took help from three different metrics apart from Nifty as well as Bank Nifty chart. We saw analysis about USD INR, also dollar index, and the third thing that we took into account was a 10-year yield. Now when I posted this video, I received a comment and the user was asking about can we have analysis for the gold, right? While I was analyzing using these three metrics like USD INR, dollar index and a 10-year yield, gold was there in the back of my mind, and for a very obvious reason that last couple of years have seen a huge surge in demand, or we have seen a good rally on the price chart of gold. So we have a gold futures 1 monthly chart in front of us, and this rally started from Russia Ukraine war in 2022, and from those period currently for this particular year we can say that typically central banks purchase around 500 tons of gold every year. So historically it has been a kind of performance that they on an average purchase 500 tons of gold, whereas in this particular year that demand has surged by let's say 41%, and in the year 2025 till date they have bought around 900 tons of gold, and that's a massive boost, as a result of which you can see the demand in gold or a sharp uptrend in gold and Nifty not doing much has caused this ratio chart between Nifty and gold futures has dipped to an oversold region. Now this is not the first time it is happening so, right? So oversold signal at a key support area, this has happened first in August 2011, secondly it happened in February 2016, and everyone knows that it again happened in the period of COVID. Now whenever these kind of oversold scenarios have taken place, the market index Nifty has rallied about 125% in every instance. I have just marked the actual scenarios. So if we take into account the August 2011, the rally didn't start immediately. It took about 4 to 5 months for the market to bottom out and started moving from there. Typically this happened, and from here the first leg of rally completed about 100% gains. The second leg, which started from 1st February 2016, it started and it completed somewhere in August 2018, and it generated about 67% returns. And the last phase, which started in March 2020 and it lasted probably up to October 2021. So this phase gave about 126% returns. If we combine these three returns and calculate an average value for these returns, then the average value comes to around 100% returns in next 28 months, right? So 28 months is little over 2 years, 2.5 years you can consider, or 2 years and a quarter at least. So in this particular phase, when we get such an action, let us be conservative. I will not consider 100% returns, but if I consider even 50% returns, then in that case the target from these current levels goes to around conservative 50% returns I am considering. So 50% returns take you somewhere around 37,500 or so, right? A target of 37,800 in next couple of years is a very conservative kind of a target for gold, and these kind of returns can be achieved for two reasons. Number one, gold, when we take a look at the higher time frame on gold chart, like a monthly chart or a quarterly chart, we can see that even on a quarterly chart, we can see something that is called as a bearish divergence as per Corners RSI. And whenever we get these kind of divergences, the market tend to consolidate, either consolidate or correct, right? Here at this point in time, I am not expecting it to fall rapidly. It may or it may not fall, but at least what we can expect is that there can be a possible 10% rally from here, a possible 10% upside to the chart. And if that is going to happen for the next year or so, this particular chart, this gold prices should ideally stay between a range from this high to around 2800 mark. So this is where I expect prices to stay. If you want to take a quick look at what does it mean in Indian value, so let me just quickly change this to Indian rupee, and let's change this to a gram of gold chart, right? So in that case, we can expect a 10% rise from here. Currently 1 gram of gold is trading at 10,445. A 10% high from here can be somewhere around 11,500, right? So 1,15,000 per 10 gram can be a possible cost, and then this is expected to remain in a range from this high to this low. This is a possibility. Again, we will observe how this chart is actually panning out, because it usually takes a lot of time for gold prices to kind of consolidate or adjust, and then it can drop down up till, let's say, 77 to 80,000 per 10 grams is what the expectation is. This is how the chart should ideally go ahead, and it should spend about 1.5, minimum 1.5 to 2 years is what the expectation is. These are the three things. But most importantly, while gold will start consolidating or correcting, that should be the ideal time where we can see Nifty rallying to around 37,000. Again, this is a conservative target. Don't be surprised if Nifty reaches to 40,000 or maybe higher in next couple of years. So that is also a possibility. We are just taking into account a conservative target over here, right? So this is what my analysis for gold and gold versus Nifty suggest. Do write to me in comment if you have further questions. I'll be happy to answer those. Also, today is 15th of September. So let us try and create one video every mid of the month, and we talk about USD INR, dollar index, 10-year yield, and along with that we'll talk about gold as well as silver. A short 15-20 minutes video, and we'll discuss about all these reasons, all these things which might propel the emerging markets and also Nifty. So let us start taking a review of it every month, month on month. That's it from me. Thank you so much. I'm signing off. Bye bye.